You've seen the headlines, right? Metals are on an absolute tear, hitting prices that look, well, they look almost unbelievable. But what if the whole story we're being told, about this massive metals bubble is completely backward? Today, we're going to dive into Willem Middelkoop's really provocative idea. The bubble isn't in gold or silver. The real bubble is the US dollar. Okay, let's get right into it. To really get a grip on this argument, first, you have to appreciate the sheer scale of what's happening. The price moves we are witnessing are, well, they're just staggering. So let's start with the king, right? Gold. It hasn't just broken records, it has absolutely shattered them. We're talking about a surge to an incredible $5,000 an ounce. For years, this was just a fantasy number for gold bugs, and now, here we are. It's reality. And then there's silver, gold's more volatile cousin. Well, it's definitely living up to that reputation. It's on a massive run, hitting $100 an ounce. That's a price point Middelkoop himself thought was possible, but not with this kind of speed. And listen, it's not just the precious metals. Copper, the industrial workhorse, the thing that's literally the backbone of the economy, it's also soared, breaking out to $6 per pound. So right across the board, we're seeing these just explosive moves. So, this is the crucial question, isn't it? What do we even call this? Is it like some people are saying a bull market on steroids? Or are these crazy prices a classic sign of a speculative bubble that is just moments away from popping? That is the question on every single investor's mind right now. But this is where the story takes a huge twist. And it's a big one. What if we're all looking at the wrong thing? What if the soaring prices of metals aren't actually telling us a story about the metals at all? And this right here is the core of Middelkoop's entire argument. He says it so plainly. The story isn't about strong metals. It's about a fundamentally weak and vulnerable US dollar. People aren't just buying gold. They are fleeing the dollar. So why are they fleeing? Well, this slide shows the perfect storm that's creating what he calls the dollar bubble. You've got absolutely skyrocketing government debt. You've got this intense geopolitical conflict heating up between the West and the BRICS nations. There's the constant threat of another financial crisis lurking around the corner. On top of that, relentless currency debasement through money printing and deep political instability inside the U.S. itself. I mean, it's a recipe for a flight to safety. And if you buy into that idea that this is really a dollar crisis, not just a metals rally, it completely flips the timeline on its head. We're not at the end of a bull market. We could be at the very, very beginning of a massive shift into hard assets that could last for decades. Now, this whole shift isn't just happening on Wall Street charts. It represents a brand new front in the global power struggle. This is where finance gets real, and it meets geopolitics. Middelkoop actually has a name for this new era. He calls it the Metal Wars. And the idea is that controlling physical, critical resources, like China's dominance in rare earth elements, is now being used as a strategic weapon. It's just as powerful as any army or any currency. And this slide just lays out the chessboard perfectly. For years and years, the West, led by the US, has weaponized the dollar. They've used sanctions and the global financial system to call the shots. Well, now, the East, led by China and the BRICS alliance, is making a countermove. They're weaponizing what they control, the supply of critical metals. It's a brilliant strategic response. Okay, so for an investor, this all sounds pretty momentous, right? But it also brings up that one key question. With prices this high, is it already too late? Have I missed the boat? Well, the answer, according to this analysis, is a firm no. Despite these record-breaking prices, there are multiple signs that suggest we are still in the very early stages of this long-term trend. You could say the mainstream crowd hasn't even arrived at the party yet. And just look at the data points. First, the general public is only just now starting to wake up to what's happening. Second, the really wealthy investors, the family offices, on average, they still have less than 2% of their money in commodities. And get this, silver mining stocks are as cheap today relative to the price of silver as they were at the absolute bottom of the market in 2015. And finally, those small speculative exploration stocks, they haven't seen those crazy fireworks that always signal a market top. This slide on valuations is incredibly telling. You've got a tech giant like Apple trading at a price-to-earnings ratio of around 25. Meanwhile, a major gold producer like Newmont or Barrick, who are generating incredible amounts of free cash flow right now, they're trading at a PE of just 10 to 12. I mean, by comparison, they're dirt cheap. That suggests there is a ton of room for them to run as more investors rotate in. And the situation with silver, well, it's particularly explosive. For decades, there have been these massive documented short positions, basically huge bets that the price will go down, held against silver. In a market like this, if those positions are forced to cover, you could see a legendary short squeeze that might send prices to $200, $300, or maybe even $400 an ounce. But it's so important to understand that this massive opportunity, it doesn't exist in a vacuum. It is set against a backdrop of equally massive global risk. You simply can't have one without the other. The same forces that are driving all this capital into hard assets are also pushing the world toward way more instability. Middelkoop warns about a potential sovereign debt crisis. That's when a whole country can't pay its debts anymore. He sees a huge increase in market volatility coming, and he predicts that the geopolitical conflict with the BRICS and the internal political conflict within the US are both going to intensify. This bull market has to climb a very, very real wall of worry. And all of this leaves us with the ultimate question, not just for today, but for the rest of this decade. As the old certainties of the financial world start to crumble under the weight of all this debt and conflict, where do you turn for safety? What is the ultimate safe haven? The answer to that question is going to define the winners and the losers of this new era we are just now beginning to enter.